All right, so I want to kick this off. Um, Me and Rob are holding down the fort this week. So, any good news you want to share besides the news you just shared with me?
I've got a, closing down in Maricopa next week,
Nice,
and the house up in Troon North set to close in probably another couple of weeks. So
awesome. Gonna have some spending money for those Christmas presents.
yeah,
My wife just reminded me of that. She's like already started to buy stuff for Christmas. Like, are you kidding? That's like 3 months from now, but it's coming.
uh, yep, it is. It is.
So I finally got an investor to offer through. He's right around that 250 price range, so it's like fighting 30 other offers all the time. But
Yeah.
finally got one to go. Of course, it has all kinds of weird issues, non-conforming, so that scared most people away.
Hmm.
That's it for me. Let's just jump in the market news. So the market kind of doing the same thing it's been doing for the last few months. The craziness is that our days on market has actually ticked up a little bit, even though we're starting to get into the fall season where we should see an increase of activity. What that means is things just aren't selling as quickly as they used to. This, of course, is taking in all price ranges. So when we go and dig into a little deeper later, if you're thinking things are getting better in that 250 to 500,000, unfortunately, no. Our days on market, of course, is just topped over 3 weeks. If we can get that to 30 days, that'd be amazing. But our actives are still going up in price. They're still selling, and our appreciation rate is this crazy 28%, 30% for the last year, which is not sustainable, obviously. Can't have 30% increase and actually be able to afford it. The crazy other number is our median price point still increasing, 408,000 now for the Phoenix metro area. Our current Fed market index, of course, doesn't reflect what's kind of all the weirdness that's going on right now. Everything looks kind of flat. Chandler and Glendale are ticking up slightly, but everybody else is just kind of flattening out, which means, demand is increasing a little bit, supply is increasing a little bit, it just kind of has this weird leveling out effect. If you look at our active listings, you can kind of see that trend, same thing. It's just kind of going level. During the summer, it's supposed to pop up a little bit and then it starts to go down let's go find a normal year. Let's say 2018. Well, it's kind of weird and level. 2019, this is kind of where you see it. You spike in the spring, get some good activity during the summer, things tick down. Oh my gosh, we got things coming up, holidays and everything, and then it starts ticking back up and then until the end of the year. That's normal. Of course, we're nowhere near normal this year. Moving average for the price range or average sales price per square foot for Maricopa, we're starting to see the end of the hockey stick. Hopefully, we'll see that flattening out in the next 6 to 12 months. If you see it over the 12-month average, well, if it ever loads here, for all price ranges under 2 million on our 12-month average, it basically has leveled out and flattened. So, of course, popped everything back in again for me, but trust me, that's what it really said. um, which is a good thing. We want this thing to actually level out and be more sustainable. If we look at our contract ratios, the things going under contract versus things that are coming onto the market, we did this weird little dip last month. Things are starting to get a little more towards normal, but then, of course, fall selling season started to kick off. So, of course, we expect that to tick up. Hopefully, it won't pop us into that crazy insanity range again, but it's getting close to that again. Days on market, as we talked about before, all price ranges, it's just kind of slowly creeping up a little. Our inventory is increasing a little bit, and demand is also decreasing because of affordability. You can see this in our listing success rate, what's actually selling. Things over 2 million, actually kind of crazily enough, have ticked down below 80%. They're not the same level as everybody else anymore. Even 1 to 2, it's starting to tick down. But of course, our crazy hot market between 250 to 500,000, they're just all selling. Sales price per list ratio, you see this lovely big huge spike. That big spike happened right around the middle of summer. We were getting stuff just selling crazy over high list price on a percentage ratio for all of Maricopa. Now we're back to almost normal. If you price it correctly, it will sell for that price on average. Of course, there's things below that got to take price cuts, and there's some above that go crazy above. Speaking of price cuts, this is our price cuts scenario. This is everything that goes up or down. We're actually kind of getting more towards a normalish area. Normalish is kind of where we were right around here in 2019. We're kind of creeping that way, but we're not really shooting there like some people are thinking we're going to be. We're going to be talking about investment properties later, so I want to go over rentals just kind of quickly. Our rents are going through the roof. So if you get those buyers that say, oh, I'm just going to rent for a year, they're going to be in for a crazy surprise because rentals are selling or renting out faster than houses are selling right now. If you get one on the market, if you see it on the market for more than a day or two, there's really something wrong with it. They're getting multiple dozens of applications for the same property. People offering crazy amounts to prepay 3 months. Never get that in a normal market. Another interesting factoid, percent of sellers paying closing costs. Normal, you get nice variety of them, especially in those lower price ranges where they need those extra costs. Sellers, nope, don't need to, don't have to, don't want to. Right around the time where lockdown happened, those kind of dropped in half, and then we dropped again, and now in our crazy selling market, less than 2%, which is crazy. Almost nobody's paying them unless they have to have them. Oops, come on. After it loads here, I was going to show you closing costs by price range. Typically, we see about 10 to 12% for anybody under 200,000, but considering most investors are buying these, they don't need closing costs, so those numbers are coming down. The price ranges, of course, that they really need them under the 300,000. They're still maybe only getting about 5% of that, but everybody above that, almost nobody's giving them. So if you have a buyer that needs closing costs, look into DPA. Our actives, still, like we mentioned before, it's kind of crazy. It's just kind of hovering, maybe slowly creeping upwards for all Maricopa. Our Q3 is, of course, nothing near close to being normal. Normal is supposed to be ticking down. Then Q4 is supposed to have the dip right around the holidays. Ours is just maintaining level. So hopefully, if that continues, we shall see. Our price per square foot right around the 260 on average. And just kind of in a summary, our active listings, of course, are down still. Can't have enough of them. Still not getting enough of them, and our price point is just going through the roof still. And our contracts are going down. So we're not putting as many under contract. Crazy factoid, one of the lenders were telling us is that 70% of the American public can't qualify for a loan right now, which is insane. Usually it's quite a bit higher than that. So that's kind of the market. Anybody have any questions about, national? Let's go through that real quick. Here's an interesting factoid I found when I was looking for prices or things about migration. There we go. For growth numbers. And one of the things that they asked people was, in the future, do you think most people allow remote work? Strongly agree, over half. Just agree is almost pretty much everybody else. There's a slight, small, less than 5% that either disagree, don't know, or don't care. So pretty much everybody's in agreement. Everybody's going to be working remotely part-time, at least. Some may never even go back to work. So what that means for housing hunters is majority of people are going to be looking for that fourth bedroom plus bedroom where they can turn that into a home office. Interesting migration patterns. Cold states, of course, we always have some of that out migration, especially now during a pandemic. Everybody on the West Coast, we already know, is already flooding into there. Interesting part, Vegas. I thought they were growing, but according to U-Haul, they're migrating out. Denver, too. They got just affordability issues because they're worse than us. Phoenix, of course, we're one of the hot spots. Boise, Salt Lake, anywhere around Dallas. Obviously, Texas is doing really good. Crazy. I think these numbers must be from last year because they got Florida's in migration, which I thought that was out right this year. So take that with a grain of salt. This one I do know is at least a year old numbers, but it's the best one I could find. This is combining the migration with the valuation of the homes and trying to kind of rank them. We're number 5 at 13th place, tied with, looks like, Tennessee and Idaho. But basically they're ranking us number 2 in migration targets. Vermont was 1. That I don't understand. Maybe people like living in the middle of nowhere is Vermont. So Why I say this is a couple of years old because they still have that 270,000 median price point, which we weren't at in the last year and a half, I think. But still, top five, we're still one of the top targets. The other one I showed you was current data, so craziness. Real estate investment trends for the 2021, so we're talking about them. Thought I'd throw out some of these national trends. Student housing is a big one. There's a lot of that going on that they don't have enough of it. We need more of them. Senior housing is number two. We have an aging population. Everybody's heard about the boomers. The boomers are retiring. Majority of them are over 60 now, so they need assisted living, senior living, all those fun places like Sun City and where that one is out in Mesa and Scottsdale. Co-living is another one that's really popular these days. Multiple families in one home. Sharing living space for affordability. And of course, this year, the big thing that's going on now is co-working spaces. Since majority of people aren't going back to work and majority are only going part-time, some people are thinking, why do we need this big, huge office? Why don't we just share an office? It's cheaper. Don't have to worry about the utilities, don't have to worry about the lease. Go in, sign a contract, go out when you don't need it anymore. So those are kind of the four big ones that people are looking at. This one was kind of interesting. I was looking through numbers for rental properties national. The things that seem to be getting the best returns right now are garden low-rise apartments and, of course, single-family houses. They get really good high returns, almost double-digit. Craziness is, this must be last year's data because, or no, sorry, 2020 data, because you can see hotels are getting slammed, negative 42. That's also contributable to Airbnb and Vrbo. They're just taking off. Everybody's getting into it, and their numbers are skyrocketing right now. They're getting double-digit people joining and listing properties on there. And it's one of the number one things that investors are saying, hey, jump into this, jump on this bandwagon. It's the really great thing to get into, make triple the money. Another one from Realtor Magazine from NAR, why brokers and agents should invest in real estate. I was expecting a nice, fun fact-filled article, and her blog post was just fluff. Fortunately, they couldn't pull any numbers out of there except one of her key takeaways, which I stole. So that's the national news and the market news. Any questions on any of that before I jump into the tip of the week?
No, jump away.
All right. All right. One of my favorite ones to talk about, investing. So the reasons to grow your investments or how to grow your investment portfolio. Had to throw in that comic one because me and my wife are always on opposite sides on this one sometimes. My favorite one is we always get in arguments over the guest house, what to do with it. She always wants to make it her dream home that she wants to live in someday. And I keep telling her, the return on those ideas are horrible. It'll take us years to get that money back. But so there's a give and take on that if you want to do about living in your own home, using it as investment property, but we'll get into that in a little bit. So why would you want to invest in real estate? Well, obviously you are in the real estate market. You know more about this. You have more ins. You have more of those relationships. And of all the investment vehicles and assets that you could invest in, why not property? You already understand it. You've already got insights into it, and you already have all the extra data that other people do not. 68% of agents that they found will continue to work as long as their health allows. I think that's kind of crazy, but some people love working. My father was one of those. He tried 3 times to retire and it finally stuck. And even after he retired, he still carried around his briefcase. I thought that was hilarious in his car. I don't know why. Every once in a while he'd pop open the trunk and get stuff out of his briefcase. I guess it was just habit. Inman found that property investments are the most popular for agents for their retirement plan, over half. Others relying on, of course, personal savings too as well, what they've been saving and investing. Majority of those going into either SEP IRAs or simple or solos. We'll talk a little bit about those later. Different type of things to put your money into as well, and you can also still put those into real estate if you like. You can. The other thing, like I mentioned before, another good reason why to get into real estate is you can collect through your daily activities. All the stuff about finding the right property. I mean, if you go out and show 20 houses, and one of those are like, oh, hey, this would make a great rental property. If your client is not interested in it, it's not a conflict of interest for you to go back later and make an offer on that property. Your experience as an investor will also help you attract new investor clients. Number one thing that investors are looking for is an agent who also invests. You understand the game, you understand the lingo, and you understand what you're looking for. Another good one I was talking about, if you're looking for retirement, a general rule that most people kind of ban around is if you get to 10 year rentals. Some say 20, but the typical person, if you look over your expenses and you reduce your expenses in retirement age, 10 is probably an ideal target number in most markets. There we go. Over here, crazy statistics. The people that are 55, 64, majority of them only have $12,000 in savings, 100,000 in the retirement fund. Wow. Most people, they say it takes about a million. So if that's the average, most people are pretty far from it. So what about the pandemic and a possible future recessions? People are always worried, what's going to happen to the real estate market? Real estate's actually less volatile than most of them. It's more resistant to changes. The what they call rooftops, do follow the stock market, but it's really slow. If the stock market tanks out, maybe by the end of the year or 3 to 6 months later, you might see some change in the real estate market. People always need homes. They always need places to live. So it's a hard asset that's always there. It's always something you can go to and cash it out. It's a little less liquid than these others than stocks, bonds, gold, silver, savings account. But that's why you have balance in your portfolio. Launchpad. ASREA is a great organization. I know I mentioned a few other times. I try and encourage people to go. There's one class I wish I could make every agent or licensee take, but of course I can't do that because you're all your own bosses, your own business people, and your own independent contractors. But if I could, I would make everybody take this entrepreneurial self-assessment. It's a really great way to check out, is this right for me, much less real estate, but also investing. Of course, their main thing is to try and find out where you should go in your investing career and what might fit you within investing in real estate. There's different multiple paths you can go, hundreds of different ways you can invest in real estate and different risk ratios to profit and returns. What they'll help you do is kind of work through that. At the bottom of the page, you can see all the different icons, help figure out, build up your team, what education you might need, what the optimal path for you is based on your risk tolerance, your understanding, your knowledge, what type of properties you like working with, what kind of real estate that you understand, would like to work in, and kind of figure out timeline of funding. All the fun stuff you got to figure out. The types of real estate to invest in, there's all kinds. This is just a few of them, the big ones that most people go into. Most people hear about the sexy ones, the house flipping, of course. HGTV has made that popular, even though it's all fake. Hate to burst your bubble, but majority of that stuff is not real. The numbers are horrible, and they don't really represent the real world. Wholesaling is a really great way. It's a way most, I want to say, the gateway real estate thing for most agents, because you're already looking at properties and you're also already marketing for properties. Slipping into wholesaling is like super easy. It's even here in house flipping, because the house flipping requires rehabbing, and most people may not have any background in that or understanding of it. Wholesaling, if you're selling real estate, it's just like one or two things you need to learn about how to stay compliant and keep yourself out of trouble. Renting, of course, is with the most popular one. If you're trying to build your portfolio for invest or retirement age, you're looking to build wealth, you're looking to build your net worth. Obviously, buy and hold is the biggest one. Land for prospecting, future land use. That's really big here in Phoenix right now because we're running out of it, at least around the Phoenix metro area. Tax liens, notes, REITs, and syndications. Just really depends on what kind of person you are, risk tolerance, and kind of area of real estate that kind of excites you. If you ask any investor what the biggest challenge right now is, finding deals. It's hard to find deals in a really super hot seller's market where you're competing with 40 different offers on what we call retail side of things, where the MLS. There are some deals found on the MLS. I did find a flip that just recently I shared with everybody. I think it was back in, what was it, August? Yeah, but 6 months ago, it was still there. I found it on MLS, just like everybody else. You can set up different searches. You can have all these things reporting to you. Kind of sift through them, trying to find those diamonds in the rough. You can find it from other wholesalers, like I mentioned, or you can do your own wholesaling. Networking, ASREA, meetups, bigger pockets. There's all these different networks that are other investors looking. It's surprising when people are like, why would they give me an investment deal? And it's like, well, let's say I love doing single family homes and I buy and hold for 10 years and I come across a really great deal on a mobile and I don't understand mobiles at all. Why not refer it out to somebody I know? Multiple times I've sent them deals and they send you back deals. Homes that can't be financed. That's a really big one right now because, like I mentioned before, we're running into a crunch of 70% of people just can't afford or can't qualify for a home. There's a lot of people that want to buy but just can't buy. And then auctions, of course, there's ad auctions, there's real estate auctions, there's, of course, foreclosure auctions, which there isn't very much right now. We'll go into a little bit later. Once you find the deal, of course, you got to fund that deal. Funding it, my least favorite, but some people's, their most favorite is using their own money. There's conventional financing, you can FHA. There's also the renovation or rehab loans. We've talked about that if your clients don't have enough money before, but I can definitely touch on those if you need more information about those. Commercial properties, commercial loans. If you're looking for 5 or more units, or if you're looking to do a short-term rental, you can actually get commercial financing, 20-year, even interest only if you want. 503Cs, that's kind of a weird one that most people don't really think about. But if you have money and you want to leave that to someone or start a nonprofit, you can invest that 503C into real estate to fund that. It's kind of a way to put your money into it and donate for a good cause at the same time. Other people's money, that's the majority of all these other on here. That's where you use someone else's money to fund it. It doesn't have to always be all your money. Private lending is kind of one of my favorites. If you find someone that's got a lot of money but not a lot of time or does not understand the market, you can help them find deals. Hard money, it's basically, how do you want to call it? If you know of a pawn shop, that's pretty much all I like to call hard money. Short term, high interest. People go like, why the hell would I ever do that? Well, true, if you have the money, you don't need to. But if you don't have the cash and the deal is good enough, using hard money, you can actually make a lot of good money. Partnerships, partnering up with another person that's got the money. Joint ventures, other funds like that. Seller financing, one of my number of favorite ones. If I can get the seller to finance it, or if they own it free and clear, or if they can do a wrap, always a great way to get properties for at a great deal without having to use your own money. Assumptions, same thing. Take over their loan, subject to. Same thing as assumptions, but you don't have to qualify for them. Lease option, lease purchase. Those will get a bit more advanced. If you want to looking to get into those, talk to me later. Crowdfunding. It's crazy. There is actually people setting up, besides just the rooftop, roof stock, all those other popular ones out there. There is groups of investors that are setting up their own funds, syndicate their own money. Syndicate it out to your friends and family. There's ways to do it legally and well, and I forget the rule, but there's rules about how much money they can put in it and how do you can't go out publicly and advertise it, stuff like that. But if you're interested in it, that's out there. Hedge funds, good luck getting in on a small hedge fund unless you got, $1 million plus. How most people do, if you already have the money and it's just sitting in those retirement funds that you don't like it, and you're like, I don't like dealing with stock market, you can take control of your own IRA. I love this. I did this 2 years into my software career. Took over my IRA because I was like, why am I paying them money to lose my money? So I was like, I already understand real estate. Why don't I just do it out of there? Still have it. Still do some tax lien investing. That's where I do most of my tax lien investing is through my checkbook IRA. There is a better process, which I wish I'd known about solo 401k back then. You can have total checkbook control. You can be totally in control. You don't need anybody else to help set it up. Of course, you need to help them set up the legal papers. But after that, you're on your own. You're your own 401k, which is great. You can do all cash purchase. You can do debt financing on it. They do what they call a non-recourse loan. You do have to put up 35 to 45% of the cash, unfortunately. So it's not a small down payment type of plan or loan. LLCs, you can go join up with others. You can be a member. And then TIC, tenants in common, you can be, like I said, partnering with others with your solo 401k. Not as many restrictions as the self-directed because you don't have as much of the IRA. You can't, with the self-directed IRA, you can't give up the tree or down the family tree, which means you can't sell to your parents, can't sell to your kids, and you can't sell to your spouse or siblings, either way on the tree. Everybody else is fair game, which I don't know why the IRS set it up that way. I'm like, what's the difference between selling it to my aunt and uncle versus my stepson, child, fifth removed? But that's the rule. You have to follow them. The solo 401k versus a SEP, there's less rules, there's less restrictions. So if you're thinking SEPs are really good, if you understand them, your tax person says do the SEP. Say, well, what about a solo? Um, I had one of them trying to sell me on SEPs, and I'm like, I already know the solo is better for me, but that's me. There is very different targeting business models for real estate investing. Really depends on what your real estate strategy is. If you're looking for cash flow, if you're looking for appreciation, if you want to grow your portfolio quickly, like I mentioned before, wholesaling, great way to get cash. If you just need more money to fund some of these stuff, fix and flip. There again, if you like rehabbing or love or know somebody in the market or have done it before, got good vendors that can do those. Um, it's going gangbusters. 10% of all sales right now are all fix and flippers. That's 1 in 10. If you see 10 houses for sale, one of those is a flipper. Easy way to tell is if that front door is a nice, bright, solid color, like red, blue, green, yellow. I know several flippers, that's kind of their trademark. Buy and hold. This is where probably most people would go hang out, especially if they're doing an investment portfolio because they're thinking long term. This is more long term appreciation, getting some cash flow over time, but also growing the value of it. Some of them are really, really long term, like luxury rentals. Land is one of those. Um, then there's kind of the oddball ones down here, the hard money lending, non-performing notes, getting into notes and financing real estate, especially if you have your money just sitting parked in your IRA that's not making much money. There's some more advanced techniques over here, like I mentioned before, seller financing, lease options, sub-twos, the BRRRR, which we'll talk about in a second. But of course, if we're going to talk about investing in real estate, first thing I'd ask is, do you own any real estate? If you don't even own your own home, that's probably your first place you should look. A lot of people want to buy it looking at it as, hey, this is a home I want to live in. I want to make it really nice and pretty, and it's going to be amazing, and I'm going to fix up the yard, put it in a pool. Horrible. Uh, I've never been one of those people that did it. First time I ever we bought it with the intention of selling it and buying a house. So where it was always an investment, I always look at every place I buy as an investment. If you start looking at properties with that kind of a lens, you can still get a great home that you want to live in, but also could make a great investment. One of these ways, of course, is to get multiple units in it, get rentable units in it, guest houses, but even in your own home, you can rent out the rooms, rent out your backyard, lots of options, which we'll get into now. House hacking. So let's say you don't have enough money to buy a house, you don't have enough, or sorry, you have enough money to buy your own home, but maybe not enough money to buy investment properties right now. So what a lot of people do is they turn to what they call house hacking. You find the lowest down payment you can find, get into the property for the most highest LTV you can to save your capital. Hopefully, priority wise, you want to buy something with duplex or more multiple units. Unfortunately, the small multifamily here in Phoenix Metro is pretty much tapped out. Really hard to find them, very competitive market. Unless you're looking for like a single family guest house, that's kind of the backdoor way to get into a duplex. The other way you can do it is buy a house and rent out the extra rooms. Or if it has an in-law suite, mother-in-law, guest house, something you convert. One of my favorite is take a house and split it up. There's ways to do that with zoning, that you can have a mother-in-law suite, which is enough that someone can rent it out and you hardly ever have to see them. Multifamily, of course, is the easiest one. Garage space. A lot of people have these big, huge monster garages. In Colorado is pretty popular, especially toward the mountain areas. And they make these big monster 2-story monstrosities. And half the time, all I would do is just go in and add a rental unit or an apartment in there and then rent it out. And of course, there's always your backyard. If there's enough room, if you got enough large enough lot, you can add a guest house, one of these in-law suites. There's actually some people doing on Airbnb where they park an RV and then rent out that RV. One of them actually bought a lot with that in mind. They parked 4 Airstreams and built a small little guest house on the side just to make it a residential. And they rent all 5 of them. And I couldn't believe how much money he was getting for those Airstreams. He was getting something like $5,000 a month. People would rent out his Airstream. Have 4 of those on one parking lot at $5,000 a month. That's 20 grand a month. In the right areas, it works really well. Introduction to BRRRR, buy, rehab, rent, refinance, repeat. This is a really great method. to build up your portfolio quickly. This is what I started doing back when 30 years ago. I had no idea or even heard of Burr, which we'll get into later. But kind of what the idea is, you get into the home as little as possible, like I mentioned before. Get one that needs some kind of repair, fix up. You fix up that repair, put it in so much of a rehab budget. You add in your holding costs, how much you have to pay to hold on to that if you're not actually living in it. Then after you get it, you put some tenants in it, you get it rented out, and then a year later or so, if it's your own home, then you can just kind of roll out of it and buy a new one and keep repeating that process. If it's an investment property that you do not live in, then what you do is after a year, you can do what they call a cash out refi. You refinance a property to its now higher assessed value. So say you bought the house at 100,000, you put 20 grand into it, and now it's worth 200,000. You can now refinance that out to 80% of the value and take out all the extra cash and take all that cash and do it all over again. What this allows you to do is grow your portfolio a lot quicker. The idea is, which was founded by Mr. William Nickerson back in the early 60s. Some people love this book, some people hate it. I love it. I think he's basically a godfather of everything that everybody talks about with all the Burr, house hacking, etc. Because he did it first and did it successfully. All the 80s, 90s where all those real estate gurus lost their shirts and went bankrupt. Mr. Nickerson was still sitting on millions. His idea stands test of time. What his idea was basically what we were talking about just before. Burr strategy. Buy it, refinance, fix it up, rent it out, refinance it, move on. What he would do is he'd buy one house, then after a while, cash it out, refinance, buy two. Then after a while, he'd take a couple of those two. Maybe he refinances one or two of them, sell one, refinance the other, refinance them both, buy 4 or 6. The idea is to pyramid them out. You start out with just one property, and the next thing you know, you have 20 or 40. The great thing about that is if you're doing what I used to call live-in flips, is I would move every other year. Software was kind of, especially the industry I was in, was very chaotic. I was already moving every other year anyway. And I figured out, that tax rule of if you have to been in the house for the past 2 of the last 5 years, you pay absolutely no taxes. 0. Up to whatever, $250,000. Never had a house that made that much because I always bought the crappiest house on the block, fixed it up, and sold it. So it was never actually hit that cap, never paid taxes on any of it. Great way to start building up your portfolio. Vendors. So even if you're thinking I'm only going to be wholesaling, you need to know kind of what the rehab costs are going to be for your end buyers. If you're going to buy fix and flip, obviously your vendor list is how you make your money. Because you got to get those deals in, get them done, and get out as soon as possible. Right now, it's really hard to find vendors, especially certain. I think it was we're trying to get a quote on electricians. Had set up appointments of 5, 3 would show up. One of them actually was adult enough to do a quote. He got the job, so it's pretty horrible odds. Usually you get 3 of them, and 3 of them get a good contract. But they're busy. I understand. They're in high demand, so they're trying to get as much money as possible, and they'll put out crazy quotes way, way above because they just don't want the work. If you're silly enough to give them that much money, they'll just take it. But the other thing is, vendor lists, when you're doing investment clients, number one question you always get asked is, hey, do you know a good electrician? Hey, do you know a good roofer? I've had $1 for every time I got asked that question. I've been rolling in it. But basically, the final thought is, becoming an investor not only helps you bring in extra income, but also helps you grow your skill set, your network. Real estate's a really amazing asset class. Of all these things, real estate, stocks, bonds, cash savings, real estate hits all the big ones. Cash yield, equity buildup, leveraging, hard asset, all the good stuff that you want in an investment asset. That was pretty much my pitch. Was there any question on any of the tips for that one? All right. Anybody have any roadblocks, issues with their business, something we can help you with? Rob?
No, I'm just keep plugging along.
All right. I'm going to stop the recording then.